Good morning, folks. Welcome to the third of our small business events for breakfast times. Welcome, everybody. I'm Grant Mitchell. I'm the Council's Assistant Director for Enterprise and Growth. I'll do a short introduction and then hand over to our speaker, who's going to be looking at 10 top tips for around cash flow. It's often said that cash is king, and at these difficult times, cash flow is now more important than ever. In some instances, cash flow has been completely switched off for you for a number of weeks. So I think it's timely that we've got this session now as we move to recovery and then beyond. So without further ado, I'll hand over to Pete Boyce from Staffordshire Chambers of Commerce, and the stage is yours, Pete.
Okay, thanks very much, Grant. You can all hear me, can you? Yeah, okay, great. Well, good morning to everybody. I hope you're all safe and well. A little bit of background about me. I'm Pete Ball. And my background really has been in banking. I've had 2 stints in banking, and the first stint was for 30 years. And I worked my way up and became a senior bank manager. And that was where the manager had a discretionary power to lend to its customers and not the computer. I guess a bit like Captain Mannering, but not quite. And during my career, I've seen a lot of businesses do well, and equally, I've seen a lot of businesses fail, and I've learned a lot. The second stint, I worked for 1 day a week for the bank on a special project. And this came about because I wanted to set my own business up, which I did. And that has been running successfully for the past 10 years. So in addition to running my business at the moment, I work part-time at the Chamber of Commerce as a business advisor. And I really enjoy the job because I really like to help businesses with the knowledge and experience that I've gained over the years. So I'm just going to get the PowerPoint up. I'll just check in with you, Nikki, to make sure you can see it. Is everything okay? Okay. Right, my 3 objectives for the half hour are: the first thing is I'm going to share with you my 10 top tips to aid your cash flow. I'm going to show you tools which will manage cash flow effectively and assess business performance at a glance. And I'm going to explain where my 5 key drivers to business success sit within the cash flow document. So, just to kick off, some quick stats to set the scene. I don't know whether you're aware of this, but 34% of SME business owners experiencing late payments say they have to rely on overdrafts to help them meet their monthly obligations. And this, of course, can be expensive. 43% of SMEs spend roughly 4.4 billion in admin costs alone chasing late payments, and 11% of SMEs struggling with overdue invoices are actually forced to employ someone to chase up the payments. Now, I find this quite staggering. So from my experience as a banker and a business owner, I would now like to share with you my 10 top tips that I believe will help your cash flow. The first one is get to know your client. Now, I'm a firm believer that although you're dealing with businesses, a business or businesses, you're actually dealing with people. And good business is based on good relationships with those people. So it's important to get to know them. I've found that if you are easy to deal with as a supplier, you'll find that your client is much more willing to work with you. So for example, if they have a regular payment run, change your invoicing days or tweak your terms so that you can take advantage of it. Always a risk with new customers. So I'm going to share with you a very good website which I use a lot. It's called payontime.co.uk. It's to show you how you can credit check the credit worthiness of new accounts. Now you can see here why credit check here. It'll talk you through it, and on the left hand side there's a lot of information, and I suggest really you go down here and have a look at the different things. But if I just want to pick out 2 on here on the why credit check bit, it's at the bottom here, and I think this is very poignant. Commercial. From a commercial aspect, future sales are more reliable if you do this. And from a financial perspective, profit is increased by fewer bad debts and lower borrowings. I'm just going to click on this link as well, because the other thing I'm going to identify for you is this 80-20 split, and it's this bit here. And it's use the 80-20 rule to identify the few accounts which buy most of your sales. And what you do is list these in descending order of value until they add up to 80% of the total, and give that bulk a full credit check. I think that's really important. And just to go down here, you can see, you know, there's late payment letters. There's all sorts here. So do have a look at this. It's very worthwhile exercise. You know, payontime.co.uk. Okay, so that's the first tip. Okay. Now, number 2 is very straightforward here, and it's just agree clear payment terms, really. Make it very clear at the outset with your client, and ideally this should be in writing, and if you can, it should be in contract form. It's different when you have an audit trail behind your terms and it's not just verbal. Number 3, send the invoice to the person who pays the bill. Now, the person who pays the bill might not necessarily be the owner of the business, or indeed the person that you deal with, but you should always copy these 2 people on any invoices and send your invoices to both the person who authorises the invoice and the person who actually processes it. This leads to the 4th one here, that if you are e-invoicing, set a read receipt. So if you're invoicing your invoices electronically, you set this read receipt. It's a simple but effective way of getting confirmation that they've received your invoice. The number of times, you know, I've heard people say, well, we didn't receive the invoice. So this is an easy way to check up it's landed. And of course, useful if you need to start chasing a payment. Number 5, keep your payment terms short. Now, really, the payment terms that you set should be as short as possible. But you've got to recognise as well that you need to be realistic here as well. So ask yourself a question. When do you need the invoice to be paid? Now, if the answer to that question is in 30 days, the next question is, should you set your payment terms as 30 days? Well, the answer is probably not, because you will have clients that will run over your payment terms. So your average will be longer than 30 days. Therefore, if you want to be paid in 30 days, it's a good idea to set up your payment terms around a 14-day pay period. Number 6, follow up on overdue invoices promptly. The bottom line here is overdue invoices should be followed up immediately. And this often involves sending reminders and then making phone calls. But let's be honest about this. If you get to know your supplier, there's a personal relationship, and nobody likes doing this, particularly making the phone calls. But I am going to stress that it's important you do this if you want to keep your cash flow moving forward. Now, Teresa, who works in my business, does our accounting, and she has shared with me her 3 top tips, because she's had to chase things before, and her 3 top tips here with the phone calls are: call early in the day, call often, and the 3rd one is always remain polite, professional, but firm. So that's Teresa's 3 top tips for chasing overdue invoices. And the other thing with this, if you followed up on your invoices, you've not had much success, contact the Small Business Commissioner, because they, depending on circumstances, obviously, may be able to investigate your situation on your behalf, or actually signpost you to further areas of support. So yeah, nobody likes this, but important. Number 7, add overdue fees. Well, you can also consider adding overdue fees to your invoices to discourage your clients from paying you late. Now, this is actually a statutory entitlement. It's in law now. And again, I'm going to take you to this payontime.co.uk. And you can see that the late payment legislation and interest is actually in legislation here. And it tells you the way it works essentially is that the government will take the reference base rate, which is very often the base rate set by the Bank of England, and add 8% and fix it for 6 months. And that's the rate of interest you can charge on a daily basis. And you can see the reference rates here, plus 8%, and it's for a 6-month period down here. You see going back here to 2002, when interest rates were higher, 4%, so the reference rate was 12%. So legally, you can add interest on to outstanding payments, and which is a great tool here. There's a calculator here for you. So here, all you need to do is put the date the contract was formed in there, the date it was overdue, the date it was paid, and the amount, and press calculate, and it'll tell you what you can add on. So again, this payontime.co.uk website, really good. And again, as I said, encourage you to have a look at that. Just as a side thing, when we send our invoices out, you know, we actually put a little caveat at the bottom. It's very nicely, it just says late payments may incur interest charges. Please see, and then we put the payontime.co.uk link on there for them to refer to. Number 8. Now, number 8, it amazes me how much this one is overlooked as an aid to cash flow forecast, but it is so useful. Most banks do these, and it works in a similar way to a personal credit card, except it's for business use. Now, as I was a bank manager for NatWest, I'm going to share you with you the NatWest card. That's not to promote it. You can go to HSBC or anywhere else. But it works like a credit card. So what you've got here is you've got no annual card fee for the first year. So it's free for the first year. After that, it's normally around the £30 mark. And with NatWest, there's no annual card fee after the first year if you spend £6,000 or more every year from the account opening. And what this gives you effectively to aid cash flow is 56 days on credit purchases, which is interest free. And the whole amount is cleared every month, rather like a credit card. And there is an app linked to this, so you can really manage this business credit card. The app is very, very effective here. The minimum credit limit is £500 and the maximum credit limit is, well, subject to status really. And this is for businesses with a turnover of up to £2 million. So what you can do, if you have a credit limit of £10,000 on this business card, you can see straight away you've got 56 days interest free. You use the card instead of using the cash flow. So I'd recommend you massively to go to your bank and have a look at these business banking cards. Number 9, set up a merchant account. Well, the first question, I guess, is what is a merchant account? Well, very simply, it enables businesses to take card payments online, and that includes apps, in person, by telephone, or mail order. Now, there is a cost to this, and the costs normally comprise of setup fees, a monthly service charge. There can be device rental and transaction fees. But remember, all these costs are allowable expenses and they can be offset against tax. It's worthwhile because the benefits of using this a merchant account is, number 1, it provides your customers with up-to-date industry standard payment option. It's processed online and it's secure, and it reduces the amount of time you spend processing payments manually. It's just in case I'll take the card or whatever, or swipe here, and it's fast. And another thing with this merchant account is it does actually minimise the amount of sensitive payment data that you need to store. And with GDPR being quite a big thing at the moment, I think that's important because payment terms are actually processed by the merchant account provider. So yeah, that's basically a merchant account. Number 10, my final one. Now this is for me a biggie. And most businesses I've come across don't do this. When you're in business, the business actually pays its tax at a later date, a date in the future. And in my experiences, many businesses will adopt a cross that bridge when they get to it attitude with this. And in many cases, adopting that attitude, when they reach the bridge, they'll get a nasty shock. And in some cases, not making provision for tax on a monthly basis can fold the business, and I have seen that happen quite often. So my final top tip is go to your bank and open a business savings account, and as a discipline every month calculate the amount of tax due and transfer it into the savings account. Because what you're doing then is you'll have to pay the tax if you're making profits. It's separate. It's a separate commitment. It's not your money. Don't see it as your money within the cash flow. It is the government's money, which means that you've got a real handle on the amount of cash that you've got in your business bank account and the knowledge that you can pay your tax when it falls due. It's a massive thing, this. There's another spin-off with this, actually. If you're going through a bit of a tight period cash flow wise, let's say 1 month, you can always borrow the money that you've saved in the savings account. But of course, there has to be a mandatory caveat to this. You must pay it back. So what I'm going to show you now is a couple of calculators to show you where you go here. So this is if you're self-employed here. So you press the start now. Now you might not be able to see this, I'm not sure, but what you've got here is Scottish income tax and UK income tax. Now obviously you're UK. Then you've got a box here that says monthly profit. So let's say £2,000 for that month. Down here you select weekly or monthly. Well, you're going to make provision monthly, so you press the monthly button, calculate, and you can see here it tells you exactly what the monthly profit is, and the tax class 2 and class 4 national insurance is £314 which you have to save. And the idea then is you move that amount over into your savings account. So that's for the self-employed. There's another one that I quite like here, which is this one. I'll just open this one up for you, and this is for those of you who are limited companies. So what you can do here, you can actually click on self-employed if you want to and put some figures in, but if you're a limited company, this is really good, this is, because not only does it show you the corporation tax, it will also show you the employer's national insurance at 13.8%, it will show you the corporation tax, and it will also tell you as a director about dividends you can take out as well. It really is a useful website, so we'll close that down. Right, so those are my 10 top tips. So throughout my banking career, my 5 key drivers to business success are a personal survival budget, making provision for tax, which I've just talked about, a cash flow forecast, which I'm going to show you in a moment, market research in the planning stage and market research ongoing to keep ahead of trends, and robust marketing plans. In fact, 2 marketing plans, a traditional marketing plan and a social media marketing plan. I think running 2 side by side and separately are really important. So those are my 5 key drivers to business success. So I'm going to show you the first one here, which is the personal survival budget. Now, Nikki is going to send all of these documents out to you, so you can work with them. Now, the personal survival budget, this is the most underrated tool. So first question is, what is it? Well, it's nothing to do with the business. It's how much you spend personally. And I can't stress enough the importance of this document in terms of cash flow forecast. And the reason for that is because there is an inseparable link between your business and your personal expenditure, because your business has to pay you. So the amount that you're going to receive from the business is going to go from the business account into your private account, and you're going to pay your household bills. Now, if you don't fill this in fully, and what I mean by that, everything that you spend, and provide an accurate picture of your personal expenditure, in my experience, it will compromise the business, because the business has to pay you. And if the business isn't paying you enough, what you're going to find is you're going to have a cash flow problem on a personal basis. And often your personal income from the business can be one of the business's biggest overheads. And I've seen that so many times in my banking career. I've seen businesses fail because an accurate personal survival budget is not reflected in the cash flow forecast. And I'll say, if only I had £1 for every time I heard it's not relevant for me, I'm not paying myself in the first year, I really would be a wealthy bloke. And if you don't put an accurate figure in there and you're not paying yourself enough in the cash flow forecast, then when it comes to setting your pricing will be wrong too. So that's where this personal survival budget sits. It's really, really key. In my banking career, when I used to lend money to businesses and to personal customers, this was mandatory. Suffice it to say, this exercise can be stressful, because a lot of people kind of bury their heads in the sand a little bit with this type of thing, and they just kind of fill it in very broadly. My suggestion to you is, don't fill this in broadly. Be precise with everything. And what I mean by that, if you're going on holidays, you put your holidays in there. Christmas, how much do you spend at Christmas? Haircuts, toiletries. I mean, this is how we drill it down. And what I would do, let me show you how this works here, this document here. Let's say for me, let's say I spend, well, I don't know, let's say £500 a month on clothes. I can assure you I don't. But what this means is it will add it up for you. The total expenditure for the month is 500. And this bottom figure here is the amount that the business will need to pay me. So seeing this in simple terms is, you have a business account, you have a private account. £500 comes over from the business account to your private account, and you spend it and you buy your clothes. So everything needs to go in here. Now I'll give you a tip as well. This is generic down here, but make it specific for you. So let me show you. What would I do here? Instead of savings plan, I've got a dog called Millie, and she's a golden retriever. So Millie's dog food. I might even put in there Millie's vet's fees. Now, if you're going to go to a bank to borrow money, this is an instrumental part of the business plan. And because bankers see so many business plans, what they tend to do, and I used to do this, the first thing I'd flip to is this document. And if I see that somebody's thought about this and actually put in like Millie's dog food and the insurance, I know they've thought about this. And that gives me a lot of comfort for the rest of the business plan. If I see a business plan and this is just winged, if you like, then I'm thinking, and my experience is, the business plan will follow. So this is how this works. I recommend you to make it bespoke. Now, if you have other income coming in, which people often do, let's say, I don't know, let's say this is me, and I work at, I don't know, say NatWest part-time. Well, I've got a NatWest pension, let's say, and it's £100 a month. I've got extra income coming in, and what this does, it totals the excess income coming in, which means the business now only needs to provide me with £400 a month. So if you're living with a partner, it's a family situation, what you do, you put the family expenditure, then you put the income in from a partner or a spouse, which will show you how much your business needs to pay you each month. And again, Nikki will send this document out to you. Now, I'm going to show you a fantastic website. I'm a big fan of Martin Lewis here. And you'll probably be aware that banks are really helping out at the moment with people. And here you've got how to cut your household bills. You've got gas, electricity, food, council tax, the usual things down here. You've got how to cut the cost of your debts with mortgages, you know, the mortgage repayment holidays, existing loans, etc., etc. Cut your personal bills. Basically, Martin Lewis website. So when you're doing this exercise with a personal survival budget, yes, you put everything in there, but equally do this exercise as well to pare it back. Useful exercise to do to make sure you're not paying anything out unnecessarily. Okay. The next one now, cash flow. Now, if you're using an accountancy software package, it will often produce a cash flow forecast for you. So whether you have this facility or not, I'm going to start by showing you a very basic cash flow and explain how it works to embed a clear understanding. Okay, so what is a cash flow forecast? Well, a cash flow forecast really is what it says on the tin, and forecast is the operative word. And what you're doing actually is looking forward into the future to forecast here in the future business income across this top line here, and here you're forecasting the business expenditure moving forward. But the key, I think, to really seeing this in a clear light is to imagine that your business bank account is sitting alongside this document, and any monies that are paid in on this cash flow document, you visualize it effectively going into your business bank account, and equally any monies coming out of this document come out of a business bank account. So let me just show you how this works. Let's say in month one, £1,000 comes in. So you now have to visualize your bank account and that money going in there. The total income for month one is 1,000. And the amount of cash that you will have in the business bank account is £1,000. And at the end of month one, that £1,000 will be carried forward to the beginning of month two, which is the balance brought forward. Let's put an expense in here. Let's say you've got a mobile phone bill. And let's say it's £200. So let's go from the top again. The income for month one is 1,000. The total income is 1,000, which is denoted by that capital letter A. We're now going to the business expenses. £200 for a mobile. The total cost for the month are £200, denoted by that capital letter B. The next line is A minus B, which is £800. You now have cash in your bank account of £800, which is carried forward to month two, balance brought forward. So that's essentially how a cash flow forecast works. Right, okay. And now I'm going to show you, broadly speaking, where the 5 key drivers are, my 5 key drivers, incidentally, and where they sit within the cash flow forecast. One of the key drivers is the cash flow forecast itself here. I've also put the tax calculators up here for you so you can open them up. Your wages in there, which is the personal survival budget. Provision for taxes in there, which is calculating your tax every month and putting it into a savings account. And the other 2 key drivers are the marketing plans and market research. So where do they sit in this document? Well, I'll show you where they sit. They sit here. With business income, there is no guarantee that business income is going to come in until it arrives. And it goes without saying that the stronger your market research is at the outset and ongoing, and the more robust and effective your marketing plans are, the more likely that business income is to come in. So that's where the 5 key drivers sit within the document. Okay, I'm going to use this simple cash flow forecast to show you how a problem can arise, really. let's say that you're in business and you're a drill manufacturer, and you're dead chuffed because you've landed a monthly contract with Bill's Drills for £2,000 and it's profitable. And you've set the payment terms at 30 days, which is great. So let's have a look at this in the cash flow. Now I've booked things together. As you can see here, this is all monthly business expenditure, just to illustrate a point. Now this box here is the pre-startup bit. So let's assume that the business owner puts £1,500 in to the business, his own money in, which means he's got a cash £1,500 sitting in his bank account. And his monthly business expenditure is £1,500, and he wants to cover the expenses until the £2,000 comes in. You can see here that everything is fine. He's covered his overheads, the money comes in, everything's great. So next month, another 1,500 is going to go out in terms of the expenses, but you get a phone call and Bill's Drills says to you, look, I've hit hard times at the moment. I'm awfully sorry, I can't pay you until the following month. And I'm afraid I'm just going to have to suspend the orders pro tem. I hope you don't mind. Well, you've very little choice, but let's have a look what happens. So instead of that £2,000 coming in then, it comes in then straight away, minus 1,500. You have a problem. And you have to fund that problem either by bank overdraft. And if Bill's Drills phone again, and they say to you, sorry, Pete, you know, it's the month afterwards, you've still got your outgoings going out, and you've got a bigger problem. So I know it's very simple what I'm doing here, but I hope it illustrates the importance of the tight credit control on my 10 top tips to make sure this doesn't happen. And of course, using that business card that I mentioned to you. Right, okay. Now here's the big document. You'll now see why I've shown you the basic ones first when I open this one here. This is how most cash flows will look. But don't be put off by the busyness of this cash flow forecast, because essentially it works in the same way that the basic cash flow that I've shown you does. And it's really good, this is, because what you'll notice here in the months, January, February, March, April, sitting underneath that, which is the white box and the red box, you've got an expected and you've got an actual. So you use this document, and we use this in our business here. We say, OK, what do we expect to come in this month? We populate this, the income we expect and the expenses we expect. And then at the end of the month, what we do, we populate what actually happened. And when I said earlier in the objectives that we can very quickly assess at a glance where we're sitting with the business, you can see how easy this is to do, and you can make strategic decisions about the business moving forward, and it's very, very, very quick. And in its simplest format, you know, there are two ways to grow a business. You know, you've got to either increase the revenue, which up here, or you've got to cut the cost, which is down here. And very, very quickly, you can see how you can assess this and make management decisions to move forward. Now, I'm going to put a caveat on everything I've been talking about today. I hope it's given you a bit of a steer and signposted you to some websites, and I hope that I've explained things well enough for you. Once a business owner has an understanding about his business, and I believe that's key, then please do go to an accountant to check what you have done is correct and take professional advice on that. We've seen a couple of websites here. Pay on Time I've shown you. This is the Small Business Commissioner website. I'll show you finally here. Get your invoices paid on time. So you've got their top tips down there as well. So do have a look at that too. And as a final thing, what I've included in this, because often I find that businesses want to know where to get finance. Now that it's starting a business, but this applies to all businesses here. And again, Nikki will send these out to you. The business information fact sheets, and here we have sources of finance for starting a business. It tells you everything. This is what's included in here. You know, you've got government funding, crowdfunding, credit cards, bank loans, and overdrafts. So you can have a read through that. And the other thing that's a really bugbear for me is when accountants talk terminology and banks talk terminology. So I've included this in the presentation too, which is a glossary of business finance terminology here. So you can see there all these posh words for basically what are very simple explanations. Okay. So, yeah, thanks for attending. I hope you've enjoyed it. Grant, I've got to hand back to you now, but I'm not quite sure how to do that. But is Nikki in the background? Is she going to do whatever she needs to do?
Yeah, I think I'm back on the stage now, Peter.
Yeah, okay.
Thank you very much for that, and I hope everybody found that useful. Just to flag up that next Wednesday morning on the 10th of June at 8:30, we're running a session of Are You Ready to Open? And that's very much focused as we start to come out of lockdown gradually and more businesses beginning to open. It's top tips to help you open safely. You find more details on the council's website, and we'll be starting to advertise that a bit more widely on social media imminently. That's a bit more of an interactive session, and what we want from you as businesses is to understand what your concerns are about how you open safely, and if you can provide us with some questions of things that you think you might want answering, then we can tailor the session next week a bit more towards you. It's a goodbye from me, but finally I'm just going to hand over to Councillor Brian Edwards, who's the leader of the council, who'd like to close the session. Over to you, Brian.
Morning all. I'd just like to thank Peter for his comments, and I found it very useful having a small business of my own, but rather a long way through its term. But anyway, thanks very much, Peter. I hope that it's been very useful to those that have been listening, and we thank you very much for your contribution and help. Thank you.